Hi, this is Kerry Artak with Wicked Stocks, bringing you a much-needed update in the TLT. I did record this video, by the way, on August 18th of 2026. And in the last video that I presented, which was several months ago in May, we were testing this long-term trend line off the lows. This is the October 23 low. This is what I would call the coming out of COVID low. Where you've got the supply chain bottlenecks and higher inflation. And so this was the extreme of that. And then really since this is like almost 3 years now, we've been in this, two-sided framework where, interest rates drop, the TLT rises, interest rates climb, the TLT drops, so forth and so on. But of critical importance is the fact that just this very recently, in the last 4 or 5 weeks, we have actually violated this long-term trend line off the lows. There have been channel structures that we have violated. I could actually redraw one of those. If you remember this, where we tested it, did not close below it by a 1% margin, rallied up. We then did close below it. This was back in May. It's actually what prompted the last video. And I'd mentioned the trend line at that time, which was only recently clearly violated about a month ago. And we did so by a full 1% margin. So there's two ways to see this. One is we're still in a long-term bear market with respect to interest rates and the bond market. The bond market is in a bear market. So, it's like it's inversely related, of course. As the bond market drops, the interest rates climb. And so we're in a climbing interest rate environment right now. I'm going to jump to the next chart and zoom in on the same exact graph, and you can see we close below the trend line and below the 1% marker. That 1% marker can hold, as you can see here in May, and now we're below the 1% mark. Because of this more than 6 months in duration, I like to throw in a 1% violation threshold for what I consider to be technical clarity and a more certain sell signal. So we are clearly in a sell signal mode below 83.98. That was confirmed with the settlement below 83.14 a few weeks ago. And we're also below that low from 2023, which is equally significant, really. Let's move on to the next chart, and you can see that here. So we're in a long-term sell signal. There's no two ways about it. And, I'm going to just kind of go back to this original chart, which is to say that consolidation is over. At least this kind of 3-year process has been terminated. We're now in what could be another phase of significant long-term selling pressures. In other words, an increasingly upward pressure on interest rates, of course, as the two are inversely related. Let's take a look at this chart. Near term, I have 80.42. So for those of you who are, perhaps you're short, maybe you bought some out of the money puts recently, 80.42 and dropping into the upper 79 handle by the end of the month. Actually, by the first week of September, we're in the 79 handle. So this lower 80 handle is decent support here into early September. But I don't see this as an area that's going to hold selling pressures on more than, say, a monthly basis, not a quarterly basis. We could round back up to 82.42 from here, perhaps. But the path of least resistance is to the downside. And I've got some wave counts here that I've measured out. And I like wave counts for meeting objectives. I also like to see how wave counts line up. So we've got two significant ones. We've got the actual October low, of course, and the pullback high was September of 24. So that's BA. And if you take B minus A, the distance between those two, and you multiply that by 3/8, so this distance, 3/8 of this distance, of obviously a classic Fibonacci level, and subtract it back from A, you've got 75.05. And then you've got DC here. And this is the full wave. So basically, this is the May 25 low against that more recent October 25 high. And so you flip that on its head, D minus C, back of 100% of that distance takes you to 74.41. I think this area is a realistic ultimate objective. Just an FYI, a 15% move in the TLT equates to roughly a 1% move in interest rates. So from here, from where we are right now, it's like 69.70, roughly like that. I think 69.90. There is a descending channel bottom at 72.92. What am I I'm saying that I think over the next full year or sooner, we could see a 1% rise in interest rates, a series of Fed rate hikes. We have the highest fiscal deficit that was ever posted recently of over 400 billion. We've got inflation that's pesky, above the 2% mark that the Fed likes to maintain. We've got uncertainty in the Middle East. We've got oil prices that are climbing again. We've got an annual deficit that's exceeding $1.2 trillion. I could go on and on and on, but the emphasis is toward rising interest rates. And if we were to close below 80.42 in the coming weeks, I think that's where you could see kind of an accelerated descent. It's not altogether different than what we've seen before in the TLT, but we've been very quiet lately. So if we do close below this channel bottom at 80.42 at the end of this week, below 80.06 by the last week of August, I think that there's the possibility by the end of the year we fall into the mid-70s. And so once again, a 1% increase from where we are right now is around 69. This descending channel bottom will drop into the very low 70s. By the end of the year, it'll be in that 69 zone. So once again, I don't mean to paint a bleak picture, but certainly we're in a long-term sell signal on the TLT, and it has consequences. And if we close below 80.42, I think we'll see in more dramatic fashion a continued descent by the end of the year, perhaps 3 to 5 months anyway, into the first quarter, this low 70s, upper 60s. This is a zone, by the way, this long-term channel bottom where we can bottom out on an annual basis. Obviously, as interest rates climb, if we were to enter, I'm just speculating here, a global recession or a U.S. recession because of a 1% rate rise in the long-term interest rates, it'll have a contracting effect, obviously, on the economy. And if that were to occur, then interest rates can stop rising, theoretically. As the economy contracts, interest rates can also come down, and that would be, I guess that would be it. I think I'm going to leave it at that. I'm not an economist, and so I struggle, obviously, articulating some of these concepts that I do understand, but I don't speak every day. It is the trend lines and the channels and these wave counts that I think that speak to me, and I hope they do to you as well. I'm going to leave it at that for this particular Wicked Stocks video analysis of the TLT. You have a great day.